In the ancient and medieval periods, the Indian subcontinent was already familiar with an intricate system of banking and money lending. Shroffs or sarafs, as they were known, were the indigenous bankers of the era, providing crucial credit and facilitating trade. Their banking activities were not unlike those of today, accepting deposits, issuing loans, and even handling bills of exchange. Fast forward to the colonial era. The advent of modern banking in India can be largely credited to the British colonial rule. The British East India Company established the Bank of Hindustan in 1770, marking the birth of the first bank in India. Although it eventually closed down in 1832, it paved the way for the establishment of the General Bank of India in 1806, the Bank of Bengal in 1809, and the Bank of Bombay in 1840. These institutions, known as presidency banks, primarily financed trade and lent to the British government. The year 1935 marks the establishment of the Reserve Bank of India, which took on the mantle as the central bank of the country. It was entrusted with the regulation of the banking sector, issuance of currency, and control of monetary policy. The Reserve Bank of India played and continues to play a pivotal role in stabilizing the banking system and fostering economic development. In a landmark move in 1969, the Indian government nationalized 14 major commercial banks. This was an effort to promote social welfare and financial inclusion. Later, in 1980, 6 more banks were nationalized, bringing the total to 20. The nationalized banks were tasked with expanding banking services to rural areas and providing credit to priority sectors such as agriculture, small-scale industries, and exports. The 1990s brought a new era of liberalization and financial sector reforms. India opened its doors to private and foreign banks, relaxed regulations, and embraced technological advancements, such as computerization and online banking. Fast forward to the present day, the banking sector in India has seen significant growth and diversification. New players, including private sector banks and foreign banks, have entered the Indian market. The introduction of innovative banking products and services such as internet banking, mobile banking, and digital wallets has revolutionized the banking landscape in India. In summary, the history of banking in India is a journey of continuous evolution. From ancient moneylenders to modern digital banks, the banking sector has come a long way. Today, India boasts of a robust banking system comprising public sector banks, private sector banks, foreign banks, cooperative banks, and regional rural banks. These institutions provide a wide range of financial services to individuals, businesses, and the economy, making India a formidable player in the global financial arena.